70% of all gold production in the U.S. comes from a single state, Nevada. Conventional wisdom says that all the good deposits have been found. But one geologist who's discovered more than 30 million ounces of gold says he knows where to find Nevada's missing gold. And right now, he may be on the verge of being proven right. Investors and speculators can learn more at futuremoneytrends.com/gold. Greetings and thank you for joining us at futuremoneytrends.com. I have a great guest today. It's a world-class mining analyst, somebody who's a keynote speaker, and his information and research is sought out after from people all over the world. When I go to mining conferences, I've been to several in Palm Springs and recently San Francisco, and even one in Vancouver. And this is a very popular guest, and I'm happy to have him on our show today. I encourage everybody to go to his website immediately. Now is the time, in my opinion, to be prudent, but also to start looking for good deals in the junior resource market. And where you're going to really appreciate our guest today is he's not just looking for the typical exploration play or the typical mining play. He's looking for the people out there that are doing something different, that are bringing some new value to the table. Our guest today is John Kaiser, founder of Kaiser Research. John, thank you so much for joining us today.
Daniel, thank you for the introduction.
Well, hey, I've been looking forward to this call all week, and I've got a lot of questions here. We probably won't make it to all of them, but let's start off with the conflicting numbers, macroeconomic numbers we've got out today. I just want to get your thoughts. We've got weak demand for commodities, and we've got, a lot of talk about a global depression because of some of the emerging markets. But here the U.S. continues to chug along, despite anybody's thoughts of the economic data. The U.S. is definitely not, it's not falling apart or tearing apart at the seams as many of the other economies are.
Well, what we have in the United States is not a credit crisis of any sort. There has been no significant credit expansion. Mortgages only started to have net increases in the third quarter of last year after having deleveraging from 2007 onwards. And job increases have been steady. The interest rates are still relatively low, so there's no panic out there. Where the problem is coming from is elsewhere in the world, where China's slowdown has caused commodity prices to decline due to both a slowdown in expected demand growth and to a substantial supply response by the mining industry, which has now started, and in the energy industry, started almost a commodity price war, where the goal is for the lowest cost producers to keep producing and producing with the objective of marginalizing and destroying the higher cost competition. And this has had a ripple effect through the emerging market economies, both the oil producers and also the copper and then whatever producers who have been a source of demand for Chinese goods. So you have this vicious cycle going on. And China, of course, has this enormous internal debt problem also, so that the expansion of its own economy with endless building, that has slowed down substantially. The United States is not really part of that. It does benefit from lower metal prices, and it has, and to a large degree, it is not that dependent on exports to the rest of the world. So it is understandable that the U.S. economy has continued to not exactly chug along, but continue to move along, while in the rest of the world there has been a seizure and a dramatic slowdown of global trade, which we see in the collapse of the Baltic Dry Index, the shipping index. Containers are sitting there; they're not loaded. The prices are extremely cheap, and that this would be the reason people are still worried that, well, they may yet continue to raise interest rates later in the year. But the concern is that all of this is going to come together in a crunch in the next few months, and the Fed will realize our okayness is not helping the rest of the world. We need to not continue our path towards normalization of interest rates. We need to embark back on some sort of economic stimulus or monetary printing. And this is a reason gold has had a $100 gain so far this year after having a very miserable year last year.
Well, do you think gold is going to be the leader for the commodities when they turn around, when they exit their bear market? And is it possible that gold is now birthing a bull market in 2016?
Well, it's a mistake to describe gold as a commodity. It's a special asset class that is treated as a substitute for money, whereas commodities in general, they exist to be used for whatever application that they are best suited for, whether it be fertilizer materials or base metals and so on. The demand for general commodities is a function of global economic trends. And at the moment, these appear to be stalled, and I think it will be some time before we get a substantial macroeconomic uptrend. Now, the very fact that the global economy appears to be stalled and some people are having nervous feelings of a similarity to 2008, that makes gold interesting again to a large class of people who are wondering, are we facing a period of asset deflation or perhaps even in desperation, as a desperate response, increasingly negative interest rates where you actually have to pay the bank or the government to hold your money? Gold, if you own it, you have modest storage charges, but you don't have to pay anybody based on the value of the gold. So I could see gold being a stronger performer this year as we figure out where on earth the global economy is headed and how the various central banks are going to deal with that. I don't see a runaway success in gold, but which would actually be a very negative sign for the whole global economy. But I do see gold as doing considerably better than the other commodities.
What are your thoughts on the two most liquid gold mining stocks right now? You've got Barrick up 80% since September, Newmont up about 50% since September. Are these leading indicators for the rest of the mining shares? Is this, the big hedge fund money starting to get into the gold sector?
Well, in a brutal bear market like this one, which is now, in my view, in its sixth year, the juniors are not the first ones to turn around. The ones that turn around are the substantial companies, the producers. And they have been absolutely hammered in the past 2 years. Some are down 80-90% from their peaks in 2011, late 2010. So it makes sense that the two biggest gold companies in the world, which have been getting rid of assets that they no longer need and addressing their debt situation, that the hedge funds and so on said, okay, we're not getting the minus $1,000 gold price that Goldman Sachs and others have been agitating for. This economic situation is not improving. It appears to have been a major mistake to initiate interest rate increases. It's going to have to be reversed. We are going to see demand or interest in gold rise as a consequence. We better cover our shorts in these deals, and of course, once you have short covering in there, and you see an uptrend develop that's tracking a turnaround in the gold price, then yes, these companies are indicators of a trend reversal. The big question, of course, is how will it ripple down the food chain to the medium-sized companies, the smaller ones with their deposits waiting for a higher gold price, and then ultimately for the exploration sector.
For the exploration sector, which obviously gives the entire junior resource sector the excitement. I mean, it's those plays, those parabolic moves you see in some of these companies when they make a discovery or expand a zone. We had talked about Nevada Exploration, NGE on the TSX and NVDEF on the OTCQX on our last call. You had described, the specific people you like that were part of the company. But I wanted to ask you, what is it that makes Nevada Exploration different than other exploration companies? Because I think that's one of the things I've noticed as I've been listening to you profile this and other companies, that you're not just looking for regular exploration companies, you're looking for game changers.
Yes. In the current market, there's two approaches to exploration. One is you take an existing system, mineralized system, for which you've calculated resources, but the grade is such that at the metal prices that we have, you do not, it's sub-economic. You basically have spent a bunch of money to demonstrate that this project is worthless. The other approach, which is called grassroots exploration, this is where you use innovative techniques and new ideas and basic data gathering to generate brand new targets, which if you drill into it, you can and you start hitting something, you have what's called a discovery play on your hand, whose upside will not be known until the drills have spent a year probing the extent of the mineralized system. Now, sometimes you find the extent pretty quickly, and it's a big bust, and the stock play quickly falls down. But if you lurch into a major system, then you have what truly excites people. And it's been a while since we've had a major discovery by the Canadian juniors that gets everybody excited. The focus in the past decade has been on taking mineralized systems and demonstrating that at the higher metal prices that we have, they are worth developing. But to give an example of the contrast, there's a company called Gold Standard, which has spent over $60 million on a fairly large land package in Nevada at the southern end of the Carlin Trend, and they've developed a decent number of ounces, but they are all very low grade, and these ounces cannot be developed. They require $1,500 gold or higher. But the company, in continuing to probe the limits of this system, appears to have encountered a new mineralized horizon that is different from everything else that they've had before, and they just attracted a $16 million financing at $1 from Goldcorp, which is not the kind of company that invests in low-grade gold deposits that need a much higher gold price. So contrast that with Nevada Exploration Inc., which traverses the gravel-covered portions of Nevada, where the more ordinary companies like Gold Standard, don't have any way of looking at it. Nevada Exploration Inc. uses its groundwater technique to generate a new data set, which nobody has ever seen, which reveals new targets that then deserve the conventional exploration. When you apply something like that over large areas, you have the potential to find an entire Cortez Hills, an entire Carlin Golden type system, an entire Twin Creeks type of system. And in this market here, what we're seeing is a rise in interest for new techniques, for seeing undercover, for recognizing subtle footprints that aren't associated with a known mineralized system on which lots of money has been spent on in the past. And Nevada Exploration has spent $12 million over the past decade assembling a database that has yet to be tapped with the type of brute force drilling dollars that Gold Standard has put into the railroad Pinion project at the southern end of the Carlin Trend. So those types of juniors, exploration juniors, those are the ones that I am interested in right now, because if one of those gets capital and drills into a system, we have a fantastic discovery play where you talk about 20, 30, 50-fold increases in prices, not the sort of 2, 3, 4-time increases you're going to get if gold grinds up to $1,400. And a lot of these deposits that are marginal at $1,100 gold are suddenly in the money.
Well, certainly a 20, 30, or 50 times your money would be absolutely life-changing. I think that is really what a lot of investors, when they're going to speculate in the sector, they have an idea, but it's not going to come from just a normal, everyday exploration company. So when looking at Nevada Exploration, do you how important are the people that are running the company? I mean, do they have the ability, the know-how? I mean, when investors become partners with them and buy shares, who are the people that are taking this company to where you think they can ultimately go?
Before I answer that, I should let the audience know that I put my money where my mouth is. I am a Nevada Exploration Inc. shareholder, and you can also interpret that as well. I am potentially biased with regard to my enthusiasm for the company. But with regard to people, the technical teams these days are critical, and the junior resource exploration sector is in severe trouble. There's about 800 companies that owe $2.6 billion. There's about $1.6 billion left in the treasuries of about 600 companies. The system is extremely stressed. A lot of the companies that are financially in trouble are the so-called pretend lifestyle people who kind of tagged onto this game of doing the Mark Twain thing of putting a hole in the ground and then standing on top of it and braying about what this was all about. But teams like Nevada Exploration Inc.'s technical team with Wade Hodges, I believe they have a proven track record of working for big companies, identifying targets, testing them, figuring out why they weren't working, coming up with new ideas, bringing things like Twin Creeks and Lone Tree into existence in Nevada. They also have a geological knowledge that's steeped in what Nevada geology is all about. It's no good to have somebody who specializes in say, Abitibi Greenstone Belt, lode gold deposits come into the Nevada terrain and try to apply that knowledge in this direction. So yes, these days, look at the technical teams. And you mentioned earlier about the conferences. I was just at the Vancouver Cambridge conference. Ended up speaking to, you can't even say it was standing room crowd because there wasn't even room to stand in there anymore. People were complaining about being unable to get into the room. There were only 110 companies exhibiting, and 1/3 of them turned out to be members of my new 100 Bottom Fish edition, which was absolutely staggering. It's like the system has distilled itself to the elite, the cream of the crop. It was a very good conference because the companies, the management, they were proud of their stories. They were happy to tell it. The people who were still coming to this show, who were ones who are experienced with the up and down nature of the resource cycle, they no longer had this anxiety that they had in the past, where if you walk up to this company and get too close, it might turn out to be a zombie that lurches out at you and devours you. So yeah, there's lots of technical teams out there, and I wouldn't want to just focus on Nevada Exploration Inc. I would say the companies that are still in the game, still doing work, generating prospects, now is a fantastic time to look at this sector and use a filter like, is the company doing something special, such as Nevada Exploration Inc. is doing, that could lead to unexpected, enormous discoveries?
Well, that's a great point too. What you're talking about, the cream of the crop, the high quality people and companies that are still around after this brutal bear market. I've also observed the fact that, on the day that the TSX venture 2 weeks ago and the GDXJ were down huge, making new lows. I look at for the most part the high quality juniors, they were holding up, and as we enter 2016. A lot of these high quality juniors are up significantly. Some of them, they're up 25% plus. Is that possibly a sign that the high quality juniors have essentially found their bottom, and they will catch a bid anytime they, essentially there's a big sell off in the sector in general?
Well, there's two trends that you're sort of blending into one. One is the juniors, which are high quality because they have quality ounces, or are junior producers in that. And when gold started rising and went through 1100 and currently around 1150 or so, these producers and these near producers, they had been quite depressed. And there's a large audience out there that says, okay, when the gold trend is back in, these things are going to go up 50%, 100%, and then if the trend continues, they're 200, 300%. And then what will probably happen is bigger companies will step in and eat these companies up. That's a bit of the tragedy with this bear market that we've had. So if you bottom fish for these advanced gold projects, you're probably not going to get the 10-bagger that you would if this wasn't an environment where bigger companies, once they see the trend is for real, will come in and simply clean out these companies. And, of course, that will seed the system. That will result in capital being pumped back in the system. We've had massive capital outflows, which is what has caused these incredibly low valuations. Now, the other trend was, and I talked, when you interviewed me in November at the San Francisco show, I talked about the popcorn metaphor, where what we've had is a situation where all these little juniors with exploration plays, they've all sat in a pan, and rather than popping into nice fluffy kernels of corn, they've been sitting there burning and shriveling and bursting into flames. But what we have started to see this year, and I know of two of my bottom fish, one of them has actually confirmed a world-class lead-zinc discovery that is an example of sort of what Gold Standard is hoping to accomplish, where, spent $70 million on a system where to demonstrate that the near-surface oxide zone doesn't work at Arizona, in America, possibly emerging as the second largest lead-zinc deposit after Red Dog. And the valuation is still quite cheap. So all of a sudden, this stock wakes up. And there was another one which has a silver prospect in Mexico where they drill a hole, and it's the kind of intersection that you get in a typical Mexican high-grade vein system. So you say, yeah, big deal. But the geological context is, whoa, this could be laterally extensive. And the core doesn't look very interesting, and they have 3 more holes that are in for assay. If these step-outs confirm similar stuff, well, then the back of the napkin calculators can quickly figure out and say, oh, we're looking at a footprint of 100 million ounce plus silver. And it's these things, the stock got itself a 50-70% pop. We're starting to see these little sort of exploration pops, and the market is starting to respond to positive news releases. So the key is to look for companies that are actually doing something, that have a program underway, that have some sort of novel approach, and not necessarily buy them in advance unless they have a huge systematic strategy such as Nevada Exploration Inc., but be alert and do not be afraid to buy after it has doubled, because when you have an exploration junior coming from a near zero valuation and suddenly showing something and it doubles or maybe even triples, that could just be the beginning of a major discovery play where you could end up achieving valuations in the $100, $200, $300 million range, even higher if it turns out to be a world-class discovery. And because this market is so negative, the audience, the analysts, everybody is so skeptical. In the case of this silver one person said, well, one hole does not make a deposit. I won't predict what those other 3 holes would assay. I prefer to stand back and wait for these other holes to come out. And in fact, that is what kind of happened in the last decade with Aurelian's Fruta del Norte gold discovery in Ecuador. Stock went from 60 cents to $3, and then it paused, and people waited for the step-out holes. And when they confirmed that it wasn't just some down structure hole, but it was actually a laterally extensive system, the stock eventually hit $40 within 12 months of the initial discovery hole. So I think we've got these 2 trends going. One where the market is starting to respond to exploration juniors delivering evidence of a potential discovery, and also the more advanced companies that need a better gold price. People are starting to go in there and say the bottom is in, following the lead of what Newmont and Barrick have generated with their good rebounds in the past month.
Okay, so if somebody would like to get this zinc play and this silver play, KaiserResearch.com or KaiserBottomfish.com. John has also spoke very positively and noted a shareholder of Nevada Exploration. John, I want to leave the audience with this. Looking at 2016, I've heard, or I've witnessed a lot of deflation in the economy. At the same point in time, I've listened to a lot of resource veterans who've been through 3 and 4 cycles, just as yourself, and they're calling this a back up the truck moment. And I'm torn. I look at the resource stocks and the TSX, and it's like, man, this thing, if there's ever been a bottom, I mean, this looks like one. But at the same point in time, I look at the economy, different economies around the world, and I do see a natural force of deflation out there. So what are your thoughts on 2016? Is this just a stock picking year where you're cautious, or is this a back up the truck moment in the junior resource sector?
I believe that the metal price declines have probably reached their bottom. The part of the sell-off has been the definancialization of commodities as a so-called hard asset that had been built up during all the fears and anxiety about imminent inflation and fiat currency debasement. And in the case of China, where they don't believe in stuff like that, they used hard assets as collateral for speculating in their own stock market bubble and in their real estate bubble. And both of those bubbles have come to an end, and there's a huge pile of credit being unwound in China, and the metals have been coming out into the market. And this has hit the minor metals also. There was one exchange which turned out to be a Ponzi scheme, and it piled up several years' worth of global demand, and all of a sudden this metal is being pumped into the market, and end users don't want it. They don't need that much, and so we've seen this an overshoot on the downside to levels where, unless you believe the world is going into a population and GDP long-term decline, this has to be of a temporary nature. And indebted companies, yes, they are going to have problems. The private equity and all the other sharks, they're all lining up to carve up the more distressed big companies and pick up assets at bargain prices. But if the company has sound finances and are not a high cost producer, these are the ones where, yes, back up the truck, be patient for a couple of years, and maybe benefit from a 25-50% rebound this year, and get the bigger score in the next couple of years. And if you're more aggressive, look at sectors like the junior sector, where the valuations are much lower, where it's really a glass worse than half empty, a glass empty type psychology. And when you get that switch back to glass half full, you can see fabulous gains simply in the market, repricing these companies as having potential to deliver success rather than being on an inexorable track to delivering nothingness.
It is a great time to be a resource investor. Certainly, just looking at the share prices themselves. I mean, this is, if you liked resource stocks in 2011 and 2012, you should love them right now. John Kaiser of Kaiser Research. You can check him out at kaiserresearch.com or kaiserbottomfish.com. And you can get his picks. As you can tell from just listening to this interview, John is not like other mining analysts. He's out there. He's looking at every single company out there, and he's looking for those specific things in the people or the techniques they're using for exploration or building their businesses, or something new that they bring to the economy. John, thank you so much again for your time. I really appreciate it.
Daniel, thank you. It was a pleasure.